let's talk about something that you won't see on the mainstream news, the Fed's overnight reverse repo facility. Now, don't let the name scare you off. They make it sound deliberately complicated so that the average person tunes out, but you shouldn't. Because the chart we're going to look at here in a minute shows exactly just how much stress is on the system. Think of this facility like a big pawn shop for Wall Street, where big banks and financial institutions can take in an asset of value, like treasuries, and exchange it for quick cash with the promise to buy them back later, which is fine in normal times. But what happens when everyone wants to pawn their assets at once? Well, the pawn shop, they might not have enough available cash. But remember, we're not talking about people bringing in their old jewelry. We're talking about trillions of dollars worth of U.S. Treasury bonds. When that happens, when there's no more cash, bam, a liquidity crisis. That's exactly what happened in 2020. And what did the Fed do? Instead of saying we can't support this program anymore, no, they supported it. They took the assets in return, lent out freshly created money to the tune of $400 billion. Now, this was barely covered in the media. They claim it's not quantitative easing, but if it walks like a duck and quacks like a duck, it's probably a duck. Now, with all of that in mind, let's look at the reverse repo chart together. When the line goes up, it means that there's more cash in the system and banks are looking for somewhere safe to park their cash. This is what happened in 21 and 22 during the stimulus flood. But now, if we zoom into present day, you can see that that cash is being drawn out and being drawn out fast. At its peak 2 years ago, this facility held $2.5 trillion. Just 2 weeks ago, it held $400 billion, but today, $98 billion. Why is this so concerning? Because when this runs dry, when this hits zero, the Fed loses a critical buffer, and they are not just going to let liquidity stop and have the system seize up. Those various tools they were talking about, they are going to warm up the money printer, put it on overdrive, and start pumping more cash back into the system into U.S. banks. This is how they do it. This is how they get away with creating a bailout without coming out in the news and saying, we are enacting a bailout.